Residency and tax liability in Canada, what you need to know. Hey everyone, welcome back to the channel. Today, we're talking about residency and tax liability in Canada. Whether you're new to the country, moving between provinces, or just trying to understand how where you live affects your taxes, this video is for you. By the end of this video, you'll have a clear understanding of who needs to file taxes in Canada based on residency, how provincial tax works and why your December 31st location matters, special considerations for Quebec residents and cross-province income. Make sure to watch until the end so you don't miss out on key tax tips. 1. Federal tax liability. Residency determines your tax obligation. Let's start with the basics. In Canada, income tax is based on residency, not citizenship. For tax purposes, individuals fall into three main categories. 1. Full-year resident, ordinarily resident, someone who lives in Canada for the entire tax year. 2. Non-resident, someone who does not live in Canada at any time during the year. 3. Part-year resident, someone who either immigrates to or emigrates from Canada during the tax year. In this video, we're focusing on full-year residents, particularly those living in Quebec at the end of the tax year. As a full-year Canadian resident, you must report worldwide income from all sources on your federal tax return. If you live in Quebec, you also have to file a Quebec provincial tax return unless certain income types are exempted under federal or provincial law. 2. Provincial tax liability. Where you live matters. Unlike federal taxes, which apply to everyone in Canada, provincial tax is determined by where you live on December 31st of the tax year. This means the location where you earn your income does not affect which province taxes you, only where you live at year-end does. Example: if you live in Quebec but work in Ontario, you still pay Quebec provincial tax on your entire income, not Ontario tax. So, how does the Canada Revenue Agency, CRA, determine which province you live in? The CRA looks at significant residential ties, which are divided into primary and secondary ties. Primary ties, most important factors: the location of your main home or dwelling, the location of your spouse or common law partner, the location of your dependents. A taxpayer is generally considered a resident of the province where they maintain their primary home and where their family resides, even if they are physically in another province on December 31st. If primary ties do not clearly establish residency, the CRA will consider secondary residential ties, such as vehicle registration, social and community ties, provincial health coverage, economic ties, bank accounts, business ownership, personal property ownership. These secondary ties only come into play if primary ties are unclear. In some cases, CRA may require taxpayers to fill out a residency questionnaire to confirm their province of residence. 3. Tax residency in Quebec. What you need to know. Quebec follows the same residency rules as the federal government, but with one key difference. To be considered a Quebec resident for tax purposes, you must not only live in Canada but specifically reside in Quebec. What if you move during the year? If you move between provinces, your tax residency is determined based on where you live on December 31st. However, in some cases, a person who moves out of Quebec may still be required to file a Quebec tax return, such as when they were enrolled in Quebec's prescription drug insurance plan for part of the year. They maintain strong ties to Quebec, such as a family or year-round home. Their move out of Quebec is temporary rather than permanent. This is why it's important to keep track of your living situation, especially if you are moving across provinces near the end of the year. For special situations, earning income in another province. Quebec residents with income from another province. If you live in Quebec but earn income from another province, you still need to declare that income on both. 1. Your federal tax return, T1. 2. Your Quebec provincial tax return. Employers and financial institutions outside Quebec issue federal tax slips, T4, T5, etc. If you receive these, you must still report the income on your Quebec tax return. To ensure proper documentation, make a copy of your federal tax slip and attach it to your Quebec return when filing. Non-Quebec residents with income from Quebec. If you live in another province or territory but earn income from Quebec, you do not pay Quebec provincial tax. Instead, you 1. File only a federal T1 return, reporting all income. 2. Pay provincial tax in the province where you live on December 31st. 3. Claim a tax credit for any Quebec tax that was withheld at the source. This prevents double taxation and ensures that you're only paying taxes to your home province. 5. Key rule: your residency at year-end determines your taxes. The golden rule in Canada is: you are taxed in the province where you reside on December 31st of the tax year. This system is designed to heavy checkmark prevent taxpayers from being taxed by multiple provinces. Heavy checkmark ensure that tax liability is based on long-term residency ties rather than short-term work locations. Heavy checkmark maintain fair and consistent tax rules across Canada. Final thoughts. Understanding how residency affects your tax liability is essential for accurate tax filing. Whether you live and work in the same province or earn income across multiple provinces, being aware of these rules can help you avoid penalties or incorrect tax filings. Take advantage of available tax credits. Plan ahead if you are moving between provinces. If you found this video helpful, give it a thumbs up, subscribe, and hit the notification bell so you don't miss our next tax guide. Have questions about residency and taxes? Drop a comment below, and I'll be happy to help. Thanks for watching, and see you in the next video.